This is fun. We all scroll Tesla Twitter for 10, 20 minutes at a time. Today we're going to be doing it for exactly as many minutes as you see in the title, which I don't know how long it's going to be yet. It's going to be until we get bored. But we all do this, so why don't we do it together? It's a tremendous adventure. Usually, the Tesla community is unique. So I haven't looked through any of the tweets that I'm going to be reading today. This is going to be my reaction to what we see. Might be boring, might be fun. Let's give it a try. It's funny how when you scroll on Twitter, you pretty much instantly decide whether you're going to read it or not. Something about just the form is the first thing that your brain decides whether or not you're going to give it a chance. Barry Glack, as usual, I usually read his tweets. A lot of people hate on him, but he always keeps me coming back. Some Tesla bulls are again pushing for a capital raise. One, this is the wrong time for Tesla to raise capital, with Tesla selling for way below its intrinsic value and having underperformed the NASDAQ for 3 years now. Second, Tesla surely does not need capital. With 26 billion cash today, going to 100 billion by 2028, and projected net income likely to exceed the capex needs by 100 billion over the next 5 years. Raising capital at what I calculate to be a 13% cost of equity so Tesla can invest it at 4% pre-tax is clearly value destructive. Those advocating for a capital raise are not running the numbers. Who is advocating for a capital raise right now? I know some people were a couple of months ago. Instead, their argument seems to rest on a view that capex needs are rising and a view that the US economy is heading for a cliff. Certainly not true, Gary says. We forecast Tesla net income and D&A. What is D&A? Deamortization and I don't know. Will total 200 billion over the next 5 years, which is 2x, even a doubling of capex. So Gary forecasts $200 billion net income over the next 5 years. Wait, let's look at this chart. Non-GAAP net income. 2024, 14 billion. 2025, 21 billion. 30 billion. 43 billion. 57 billion in 2028. That's wild because he always says that he doesn't include robo-taxis in his valuations. So pretty big numbers, not gonna lie. Oh, so D&A is depreciation and amortization. Yeah, I'm with Gary on this one. I don't think Tesla needs to raise capital, and a lot of people on Twitter right now are actually talking about, a new compensation package for Elon. So I don't know how we can talk about raising capital and a new compensation package for Elon at the same time. Those things seem like, two different scenarios completely. So let's keep scrolling. I would say that Omar from Homar's Catalog is literally my favorite account on Twitter. I love his satire. I think he's freaking hilarious. I missed the interviews between James Dauma and Dave Lee. Those are always my favorite. But if he's replying to this post, it must be pretty interesting. So let's check it out. Two different valuation approaches for Tesla. Is there a right way? Number one, it's mostly an auto business. One approach is to look at what Tesla is selling today, mostly electric vehicles. So you look at the global auto market, EV adoption rates, Tesla's market share, and project out a growth rate for the number of vehicles sold. You then make some guesses at how profitable the vehicles will be. You include some earnings from the energy business, and you compute the net income out to 2030. Finally, you discount those earnings back to the present and you come up with a price target. You can compare your numbers with Wall Street analyst estimates to see if you're higher or lower, and you buy or sell the stock accordingly. You can call this method the Gary Black approach. It's safe in that you're dealing with actual products that are being sold today, and you ignore all the speculative stuff that may or may not appear in the future. You know what? And that was one of the reasons that I ended up going all in on Tesla was guys like Gary Black, who I knew were conservative and I knew that they were only valuing what they could already see. And the fact that they were above where Tesla was trading at that time just like gave me even more confidence to go all in because it felt like a margin of safety is the way I thought about it. In Benjamin Graham's book, he talks about discovering the intrinsic value of a company and like doing that yourself. And if it's like more than 10% below what the price is trading for, you have a margin of safety. So it's pretty safe to go in. And when Gary Black was coming up with these valuations that were above where Tesla was currently trading, but he wasn't factoring Optimus or FST or even crazy growth in energy, it made me feel like there was a margin of safety, like I could be safe on Tesla's hardware business, go all in, and maybe you hit the jackpot with these software, pursuits. But let's keep reading. For example, on December 14th, Gary Black stated, I can see the promise of the Tesla bot, but still want to view it as an upside option rather than bake it into my valuation until we see how it adds value and understand the unit economics. So you leave out the new stuff that's in development, and hopefully there are some upside surprises along the way. In the chart above, you might come up with a business value of 1.7 trillion for autos and energy in 2030. Number 2, it's an auto business with several internal startups. Another approach to valuing Tesla is to look at the sum of the parts. Autos, energy, supercharging, auto bidder, robotaxi, bots, AI inference, insurance, the list goes on. Now, not all of these businesses are producing revenue and profits today. Just because a business isn't profitable doesn't mean that it's not valuable. And just because it may not be producing revenue doesn't mean that it doesn't have any value. In Tesla's case, we can look at them as internal venture startups that are backed by Tesla. The thing with startups is that they may pan out or they might not. And the challenge is that if the startups have asymmetric upside, new market worth trillions, you might really be missing something important if you don't attempt to understand, analyze, and value them. So, how can an investor approach valuing these businesses? You can build a model for each startup and assign a probability to their success, and then add them all up. You can make it as simple or as complicated as you want by assigning different probability percentages to different model outcomes. Let's do a simple one to illustrate the point. This is, I believe, what ARK Invest does in their valuation models. They assign probabilities to different scenarios, and that's how they come up with their price target. So let's have a quick look at this chart. Potential business value with probability weights. So let's see here. 2024, you have, let's go to humanoid bot. They have a $1 billion for the humanoid bot. And percentage of total, 4%. I guess that's in 2030. This is kind of confusing. I don't really know what's going on here. I think he's about to explain it for us. Let's say that you add supercharging and you're willing to consider that Tesla might solve full self-driving. So robotaxis could become a reality. You're skeptical, so you might only assign a 10% probability to your robotaxi projections and a 90% probability that robotaxis won't materialize, but a 100% probability to your supercharger projection. Using my example, your Tesla valuation goes from 1.7 trillion to 3.1 trillion in 2030. Okay, so what he's saying here, I think, is that you have this $1.7 trillion valuation based on Gary Black's methods, but then if you just add in that 10% probability of your robo-taxi projections, it goes up to 3.1 trillion. Correct me if I'm wrong. Example number 2, you've been watching the developments in AI with interest, and you see that Tesla is developing some interesting AI-powered businesses. So you're willing to entertain the idea that Tesla might have a 10% chance of success in those areas. By adding auto bidder, AI inference, and humanoid bots at 10%, your calculation of 2030 business value now goes to $5 trillion. By using its mostly an auto business approach, you focus mainly on the growth of the existing businesses. You might get upset when profit margins decline or when quarterly delivery targets aren't met, but it keeps you out of trouble from being too speculative. On the other hand, by using It's an Auto Business with several internal startups approach, you're able to zoom out and look at the bigger long-term picture while putting quarterly results in context. This valuation approach gives you a more nuanced view of Tesla's current and future business potential with a risk of being overly optimistic if your projections are too high. But the bottom line is that there is no right or wrong way to value Tesla. But in my opinion, a sum of the parts approach is better in the case of companies with a diverse set of businesses like Tesla, Amazon, Google, Microsoft, Apple, etc. And if you follow my channel, you know that we usually do take the sum of the parts approach. So now let's go back to his chart and see if it makes a little bit more sense this time. He's got $18,000 billion in 2030 in potential earnings from the humanoid robot. And you can see at the bottom, he gives a probability weight of 10%. And so if we look at that number at the bottom, it says probability weighted 2030. You can see that the 1,847 billion number is actually 10% of what he actually thinks that humanoid bots could produce in 2030 at 18,475. So he's basically just assigning to his model 10% of what he thinks could happen. And we arrive at a $5 trillion valuation by giving a 10% probability to these various startups within Tesla. So that was a good read. That was Cern Basher. I'm going to give him a follow. Oh, I missed it. Oh, we got it. All right, let's keep reading. I don't know how videos are going to work when I'm doing these, so we'll keep scrolling. I don't know if you guys ever join Yamin Tazdivar's X Spaces, but I'm pretty much in there every day. I go to the gym and I just listen to his podcast. It's really awesome. He says, those blasting Elon for not posting about the new Model 3 or Model Y don't get the Osborne effect. Tesla needs years to ramp up the new products, and in the meantime, buyers can get the world's best selling car at the lowest price ever, $30,000 after credits, and start saving on gas today. This is why I'm confused why everyone is talking about Elon needing a new compensation package. I think people want that so that he starts talking about Tesla again. But guys, you have to remember, Elon owns like 20% of Tesla. That should be enough motivation for him to be interested in the company. And I think he is interested in the company. I mean, look at a guy like Farzad. Farzad is now on X. He wants to talk about what he's interested in. He doesn't want to feel like he's trapped in talking about Tesla all the time. Elon probably feels the same way. I'm sure he has tons of motivation. The guy's hell bent on accelerating the world's transition to sustainable energy. He doesn't need a huge compensation package for him to just tweet about Tesla. I think he's got plenty with his 20% of Tesla shares already. Like, here's a number one example, Dr. Jack. I don't know who this guy is. Let's have a look. 30,000 followers. I follow him, so I guess I follow a lot of people. But he says the following is soon to be a conversation between Elon and the Tesla board. Tesla board, yo Elon, we have your new pay package. If you take Tesla to 10 trillion, then we will make you the world's first trillionaire. What do you think of this deal? Elon, well, there is a clear path to both, and building a sustainable colony on Mars will be expensive, so it's cool. Tesla board, cool, cool. Please sign here. Or some version of this conversation will occur soon. You get the idea. I just gave you guys my thoughts on this. Elon should already have enough motivation, in my opinion. I think, giving him a pay package that pays him $1 trillion is way too far in the extreme. I would be fine with another pay package where if he gets Tesla to 5 trillion, maybe he gets another 100 billion in shares. I'm okay with that. But anything beyond that is kind of excessive, in my opinion. Okay, last tweet of the day, and I've actually already seen this tweet. I saw it last night. I just thought it was super interesting, so I wanted to show it to you guys. This guy says, vision is the most underinvested, highest potential field of artificial intelligence. Language will never have the bitrate and dimensionality to approximate the universe. Language asks artificial intelligence to come down to our level versus reaching its greatest potential. So language might actually restrict the computer and artificial intelligence from understanding the universe because humans created language, and language has its limits for expressing sometimes the way we truly feel or what we are actually thinking about. So he replies to this with another thing. He says, language is merely a way to decode back to our human brains. It's an inherently lossy way to compress dimensionality to our small minds. We are stuck in a local minima due to the success of ChatGPT, with a grand race focused largely on language instead of vision. Tesla, of course, has one of the most advanced vision systems in the world. They have 500,000 robots depleted on roads in the form of Tesla vehicles who are gathering real world data that Tesla is interpreting and using to train AI models. Anyways, I think this was actually really fun for me. I really enjoyed this. I've got some music playing in my headphones, so I'm kind of just vibing. I'm on Twitter. I'm taking you guys along with me. If you guys enjoyed this, then I think this would be a great thing for me to do on days when the news is slow. Today is Sunday. There's not much for me to react to, but if I can just hop on Twitter and see what the community is saying, and if you guys enjoyed this, then let's keep doing it. So make sure that you just have a great day.